Hello, I'm Bernard Hickey from interest.co.nz and welcome to the Investing Report. Today we look at the government's decision to block the bid for 40% of Auckland Airport by the Canadian Pension Fund. The government has essentially decided to turn away $1.8 billion of foreign investment in New Zealand. Now this is a dangerous decision for a few reasons. In particular, we think it'll keep interest rates higher for longer than they would otherwise be the case. The government's set to make decisions like this in the future as well, because there are bids by Chinese companies for Vector's Wellington electricity assets. So watch this space for more of these decisions, which we think have the potential to keep interest rates higher for longer. And here's why. Over the last 7 years, New Zealand households have borrowed about $90 billion in a debt-fueled spending spree on each other's houses and on consumption. We now have foreign liabilities of $279 billion, and about $74 billion of that was built up over the last 4 years. So essentially, we borrowed off foreigners to buy each other's houses and go on a consumption spending spree. Now that means that our debt servicing costs have more than doubled to $1.25 billion each 3 months, and that's over the last 4 years. Yet we're still running a current account deficit almost $13 billion. That's why our interest rates are nearly 10% for a 2-year fixed rate mortgage, and why they can't fall much further. We're simply too indebted. Now, foreign investors have to keep rolling that debt over, and essentially they won't let us cut those rates too much. The danger is if they see an unsympathetic government who's deciding to stop foreign investment, they might get nervous and decide not to roll over that debt. If that happens, the New Zealand dollar will fall sharply, and it's likely interest rates will have to rise even more, or at least stay up for longer than they should have. That's because we're adding debt at the rate of about $22 billion a year. Put simply, we just can't afford to say no to foreign investment without risking a sharp fall in our economy. I'm Bernard Hickey. That was the Investment Report for interest.co.nz.